We're used to insurance working a certain way, right? You pay your premiums month after month, hoping you won't actually need to use it.
Yep, it's the standard model.
But imagine a system where that's basically flipped on its head, where you only chip in when someone in your group actually needs help. Sounds pretty different, doesn't it?
It really does. And what's interesting is this isn't just some theoretical idea. We're seeing this model really take off, especially in China.
Mm.
They call it wari-kan, or maybe more broadly, net mutual aid.
Okay, wari-kan,
Yeah.
proportional insurance. The sources you shared really paint a picture of the scale here. I mean, we're talking about platforms like Xiang, that's part of
Yep.
Ant Financial, right? Alibaba's group,
Yep, that's the one.
and Shui linked to
Okay.
Tencent. Each of these apparently has, well over 100 million members. That's just mind-boggling.
It is staggering, yeah. The basic idea, the mechanics of it, is that when a member has, say, a serious illness that triggers a payout, the cost of that payout, plus a little bit for admin, like a management fee, that total amount is then shared out proportionally among all the other members. So it's a post-payment system, a big shift from those regular upfront premiums we all know.
Right. So for you, diving into this, especially with those articles on Asian fintech, this feels like a really significant trend, a different way of looking at financial models, risk sharing.
Absolutely. I think if you step back, what we're really seeing is potentially a major shift in how people think about and how they access, financial safety nets. It really challenges some of the basic assumptions behind traditional insurance.
So our mission for this deep dive then is pretty clear. Let's try and get a handle on how these net mutual aid platforms actually work. What makes them so popular? What are the hurdles they face? And ultimately, what does it all tell us about maybe the future of how we protect ourselves financially?
Sounds like a plan. So the big question is, how does it actually work day to day for the people involved?
Exactly. Let's maybe use Xiang as the main example, since one of your sources really digs into it. So someone gets sick, say with cancer, meets the criteria, they get a payout.
Okay.
Then a management fee, I think you said around 8% for Xiang, gets added on top of that payout amount.
Right. That's the platform's cut for running things.
And that total amount is then just divided equally among all the other 100 million or however many members.
And a really key point, something that builds trust, is the transparency. Apparently, the way they calculate these shared costs, the formulas and stuff, they're generally made public. Anyone can see them.
Huh. And your source had that concrete example. For Xiang, these contributions happen, what, twice a month?
Bi-monthly, yeah.
And recently they've been around 4 yuan, which is
Mm,
less than 60 US cents.
something like that, yeah. Very low.
So the total monthly cost is tiny, like 8 yuan, maybe $1.20 US. And for that, members could potentially get up to 300,000 yuan, what's that? Nearly 50,000 US, if they get diagnosed with a serious illness covered by the plan. That's a huge potential benefit for such a small cost.
It's a very appealing ratio. But what I found particularly fascinating, maybe even unique, is their system for handling disputed claims.
Oh yeah? How does that work?
Well, if there's some question about whether a claim fits the rules or if it should be paid out, the details of the case, anonymized, of course, protecting privacy, get shared with all the members,
Seriously, all 100 million.
however many are in the plan. And then the members themselves actually vote on whether the payout should happen.
Wow. That's a completely different way of doing things. Community voting on insurance claims, essentially.
Pretty much. And it's not just people. These platforms lean heavily on tech. Your sources talk about AI, like image analysis for checking medical documents.
Right, verifying things quickly.
And using blockchain for managing the whole system, keeping records secure and transparent.
Okay, so that tech backbone is crucial. It's what lets them operate at this massive scale, right? Something old school mutual aid groups just couldn't do.
Exactly. And, one of your sources pointed out this isn't a totally brand new concept. These models started popping up in China around 2011. So China's really been leading the way in this specific area for a while now.
And it's important you mention to understand the regulatory side in China. This net mutual aid stuff, it's not legally classified as insurance there.
Correct. It sits under a different regulatory framework overseen by specific authorities. The language is different, too. The payouts are called mutual aid funds, or huzujin,
Okay.
and the member contributions are sharing fees, fen tan jin. It makes it distinct.
Got it. So that legal distinction is pretty important. It lets them operate differently from standard insurance companies.
Absolutely.
So, okay, this model emerges. It's different, tech heavy, and it just explodes in China. We mentioned the numbers Xiang, Shui, both over 100 million users. That's a huge chunk of the population.
Incredible scale, yeah. And it clearly shows they're tapping into a real need. And as one of the sources highlighted, the success of these big two has basically drawn in other major tech players. You've got Baidu, Meituan, Suning, Didi. They all jumped into the market.
Right, once the model was proven, everyone wanted a piece of the action. It's interesting, though, your sources also mentioned Japan has something similar but different. Wari-kan Hoken, proportional cancer insurance from a company called Just In Case.
Yeah, but the key difference there is how it's regulated. In Japan, it falls under what they call small amount short-term insurance. So it's treated much more like traditional insurance, even called P2P insurance sometimes.
Ah, okay. So same underlying idea of sharing risk, maybe, but different legal boxes depending on the country.
Exactly. Shows how varied the approaches can be globally.
So let's break down the advantages. Why has this model been so successful? Your sources point to a few key things. First, obviously, the technology integration. It's all online, using blockchain, AI.
Right, the tech is foundational, and that directly enables the second big advantage, fairness and transparency.
Oh, so?
Well, like we said, payment cases are usually disclosed publicly, anonymized, of course. The fee calculations are open, and then you have that member voting system for the tricky claims. It feels much more open.
Yeah, compared to traditional insurance where things can sometimes feel a bit like a black box, another plus seems to be cost efficiency. Automation cuts down on manpower needs, which your source suggests means a better ratio of the money collected actually going out as aid, keeping those individual sharing fees really low.
Makes sense. Fewer overheads, potentially.
No.
And the fourth advantage, which one source really zeroed in on, is this idea of innovation in user experience value. This is where it gets quite different psychologically.
Okay, explain that. User experience value.
Think about traditional insurance. You pay your premiums, but you only really feel the value if something bad happens, right? An accident, an illness.
Yeah, you hope you never need it.
Exactly. And your source made this interesting point. An insurance agent can't really, throw a party when they pay out a big claim, even though they've helped someone. The circumstances are inherently negative.
Right, it's a bit awkward.
But with net mutual aid, the argument is there's a different kind of ongoing value. Members can see almost in real time where their small contributions are going. There's this feeling of, okay, my few yuan helped pay for someone's cancer treatment this month.
Ah, so it feels more direct, like you're actively helping.
Exactly. That transparency around the cases, the voting, it fosters this sense of community, of direct impact. Your source contrasts this with paying premiums into a big pot, where you don't really see the immediate connection to others being helped.
Interesting. So it taps into that desire to help, to be part of something communal.
Yeah, that shift in perception from just a financial backstop to something fostering community could be a really big part of why it's so popular.
Now, this idea of mutual support, it's not totally new, is it? Your sources mentioned some history, like in Japan, there was something called Mujinko way back.
Yeah, Kamakura period. People pooling money for different needs. These kinds of community finance things have popped up all over historically. It's a basic human thing, sharing risk.
Right. China had similar systems too, apparently, often based on family or village ties, but nothing on this kind of massive scale.
Exactly. They lack the organization, the reach.
So how did we get from those small local groups to these huge online platforms? Your source points to a company called Hubao Gongsha back in 2011. Started offline, then went online as Kanga Gangsha in 2014.
That's seen as the first, yeah. Moving online was the game changer, using the internet to scale up that old mutual support idea like never before.
And then, boom, lots of similar platforms followed.
Oh, yeah. Your source said over 120 by 2016, but as often happens with rapid growth, because they weren't regulated like insurance, there were concerns about stability, quality control. So in 2017, the regulator stepped in, tightened things up. A lot of platforms actually shut down then.
Okay, a shakeout.
A necessary one, probably. It forced the ones that survived to get more robust, like building up reserve funds to make sure they could actually pay claims.
And then came the tech giants, Tencent investing in Shui, integrating it with WeChat.
That was huge. WeChat is massive. That gave Shui access to tens of millions of users almost overnight. Really kicked off the big competition.
And Alibaba wasn't far behind launching Xiang.
Right. And interestingly, Xiang was initially under a mutual insurance company, but then they moved it under Ant Financial. That was partly to make it crystal clear it wasn't traditional insurance, trying to build trust and navigate those regulations carefully.
Smart move. And that's how we end up with these two giants, Xiang and Shui, dominating the space with others trying to catch up.
Mhm.
Quite a journey from those old Mujinko groups.
It really is. Shows how tech can just amplify and reshape these long-standing social ideas.
So let's say someone listening is thinking, okay, this sounds interesting. How easy is it to actually join one of these? Using Xiang, again, your source says it's incredibly simple, like through a mini program inside Alipay.
Yeah, that ease of access is a huge part of the appeal. Just a few taps on your phone. And because it's not technically insurance in China, the joining requirements are generally less strict than for a traditional policy.
Right. No medical checkup usually. It's more like self-declaration.
Exactly. You basically attest that you meet certain conditions like you haven't been continuously on medication or in the hospital recently, no specific major diagnoses, no big unexplained weight loss. You tick some boxes.
Hmm. But what about people, not being entirely truthful, hiding conditions?
That's definitely a risk with self-declaration. But, the source points out, if you're found to have hidden something when you make a claim, you risk losing your eligibility entirely. So there's a pretty strong disincentive.
Okay, that makes sense. And maybe down the line, Alipay could use its payment data with AI to spot potential fraud. Your source hinted at that.
It's a possibility, yeah.
Hmm.
Another layer of checks. There's also usually a waiting period, 90 days for Xiang after you join before you can claim.
Ah, to stop people signing up only when they get sick.
Exactly. Standard practice to manage that risk, what they call adverse selection.
And one last thing. You need a Sesame credit score Zima credit of 650 or more. But apparently that's not a super high bar for most Alipay users.
Generally not, no. So overall, yeah, it's designed to be a very low-friction, app-based joining process.
Which explains the massive user numbers again. Super accessible.
Definitely a big factor.
Okay, so you're in. What kind of coverage do you actually get? On Xiang, your source mentioned 4 main options. 3 are for critical illness, mostly cancer, right? With payouts from 100K to 300K yuan, depending on age.
Yeah, they have different plans for under 59s and for those 60 and over. Makes sense. Risk profiles change with age.
And the 4th one was public transport accident insurance, up to 1 million yuan.
Right, so a bit broader than just illness cover.
Yeah.
Adds extra value.
Okay, let's get into the nitty-gritty of the contributions. How does the money actually get collected? Your source said it's deducted twice a month, 14th and 28th, straight from Alipay.
Simple, automated.
And for that main major illness plan, the cost per deduction started really low, like 0.3 yuan back in early 2019.
Tiny.
But it's gone up. Now around 4 yuan per deduction recently,
Okay.
because more claims are being paid out.
That's the nature of the model. Costs fluctuate with actual payouts. But still, even if 4 yuan twice a month, that's only 8 yuan total. Roughly $1.20 US monthly. Still very low.
Yeah, incredibly low. And the calculation is just total aid paid out plus that 8% management fee divided by the number of members.
Pretty much, yeah. And that fixed rate management fee is crucial, as your source highlighted.
Why crucial?
Because the platform earns more when payouts happen. Unlike traditional insurance, where there can be an incentive to deny claims to save costs, here the platform's financial interest is actually aligned to some extent with paying legitimate claims.
Ah, that's clever. A really different incentive structure.
That's a key design element.
But okay, if costs fluctuate, the big worry would be, could my contribution just keep going up and up indefinitely if there are lots of claims?
That's a valid concern. But your source explains that the regulators in China have put rules in place. Platforms have to hold reserve funds.
Okay.
And crucially, they have to set annual limits on how much any member will be asked to contribute in a year. And they have to tell members this limit up front.
Right, so there's a cap. What was Zhangbao's limit?
Currently, the source mentioned 188 yuan per year, which is still, what, under 30 US for the whole year?
Yeah, very affordable. And if the actual costs exceed that 188 yuan limit per member?
Then the platform has to cover the difference from its own reserve funds. So members are protected from runaway costs.
That's a pretty important safety net for the members. Provides some predictability.
It does. And helps ensure the platform remains viable long-term, too.
So the unfortunate happens, a member needs to claim. How does that work? Again, sounds pretty straightforward from your source. Just use the mobile app.
Yeah, submit photos of your medical documents, fill in the info, all through the app.
keeping it digital and streamlined.
Makes it easier, especially when someone's dealing with illness.
Then the AI checks the docs, the platform does its investigation. But let's get back to that voting system for disputed claims, because that sounds like the most unique part. Your source had that specific case study, right?
Yes, it's a really powerful example of how it works in practice. It's core to the whole fairness and transparency idea.
So what was the case?
It was about a 41-year-old man who tragically died from a heart attack, an acute myocardial infarction.
Oh, terrible.
And his family rushed him to the nearest emergency hospital. But that hospital wasn't on the platform's pre-approved list.
And the rules probably say you need diagnosis from specific, maybe higher level hospitals to prevent fraud, maybe.
Exactly. That's often a rule.
Yeah.
But here you have a clear conflict. Follow the rule or acknowledge the emergency situation where you just go to the closest place to save a life.
Yeah, a real dilemma. So what did the platform do?
Instead of just deciding internally, they put it to the members. They shared the anonymized case details, the family's arguments, the platform investigator's view based on the rules, really laying out that conflict, saving a life versus following the procedure.
Okay.
And then they had this cool feature, a jury of members who would identify themselves as having legal or medical backgrounds. These members could post opinions with special tags like supports applicant or supports investigator and medical perspective or legal perspective.
So other members could see expert viewpoints.
Exactly. And general members could like these expert comments, kind of like a poll before the actual vote to see which way the wind was blowing.
Wow, that's quite sophisticated. And the final vote?
Over 100,000 members voted in that case, and 63% voted in favor of paying the claim, despite the hospital rule violation.
So it passed the 50% threshold.
Yep. Automatic payout approved. Your source really stressed how this acts as a check on the platform's power. Unless very few people vote, the investigators can't just arbitrarily deny a claim if the community disagrees.
That's genuine member power in the claims process. Incredible.
It really is. Gives members a real stake and voice.
And your source made that sharp point about the voters, too. They aren't just voting out of pure sympathy, are they?
No, because they have skin in the game. They know that every payout, ultimately, slightly increases the shared cost for everyone, including themselves, down the line.
Right. So they have to balance compassion for the claimant with the overall cost and sustainability for the group. It encourages more thoughtful decisions.
Exactly. It's not just free money. It's a shared pool they all contribute to.
Yeah.
It's a very different dynamic than, say, complaining about a traditional insurance denial, where payouts don't directly hit your next premium in the same way.
Yeah, here the link between payouts and your own cost is much more direct. You balance empathy with, well, collective self-interest in a way.
Creates a more nuanced decision-making environment, balancing support with sustainability.
And looping back to the platform's view, remember that 8% fixed management fee on payouts.
Right. They make money when claims are paid.
So they have an incentive to pay legitimate claims. But there's a counterbalance, right? If they approve too many claims or costs get too high.
Then the sharing fees go up, members might start leaving because it gets too expensive, and the platform's whole model could unravel. It needs that large member base to work.
So it's this kind of equilibrium. The platform wants payouts for revenue, but not so many that it drives members away. Members want legitimate claims paid, but need costs to stay reasonable.
Exactly. Your source really framed it that way. Yeah. The core innovation isn't just the post-pay model or the low cost, but this whole structure of aligned yet balanced incentives between the platform and its members.
It's a system designed to make everyone work towards keeping it balanced and sustainable.
Ingenious, in a way, fostering that shared interest.
Okay, let's shift focus a bit. What about the bigger picture, the societal impact, especially on healthcare access in China? Your source had some striking survey data on Shangbao members.
Yeah, very revealing. Nearly 80%, 79.46% reported an annual income under 100,000 yuan. That's about 16,000 US.
So predominantly lower to middle income.
And even more striking, over a third, almost 37% earned less than 50,000 yuan, around 8,000 US.
Wow. And wasn't there data on their insurance coverage too?
Yes. Almost 13% reported having no public health insurance at all.
13%. Okay, so what's the takeaway here?
It strongly suggests that this net mutual aid model is disproportionately reaching and benefiting lower-income individuals, and particularly those who fall through the cracks of the public insurance system.
So it's acting like a crucial safety net, filling gaps for people who might otherwise face crippling medical bills from serious illness.
That seems to be a major part of its role, yes. enhancing financial inclusion, and access to some level of healthcare protection for potentially vulnerable populations.
But it's not perfect, right? No system is. Your source did mention limitations, like the maximum payout 300,000 yuan might not be enough for really expensive treatments.
Correct. The example given was some advanced lung cancer treatments costing upwards of 500,000 yuan on average. So the coverage might not be fully sufficient for the absolute worst-case scenarios.
Okay, that's one challenge.
The other big one is that classic insurance problem, adverse selection, or as your source put it, bad money driving out good.
Explain that again in this context.
Okay, so as more claims get paid, the average sharing fee per member starts to creep up, right?
Right, we saw that with Xiang costs rising.
So healthier members who think, I'm unlikely to claim anytime soon, might look at the rising cost and decide to leave the platform. Why pay more if I don't expect to need it? But people who do have health concerns, or think they might need it soon, are much more likely to stay, even if the cost goes up slightly.
Ah, I see. So you end up with a higher concentration of higher-risk people remaining.
Exactly.
Right.
Which leads to more claims being paid out,
Mhm.
which leads to the sharing fees going up even more, which then encourages more healthy people to leave.
It's a potential downward spiral.
Precisely. It can destabilize the whole pool if too many low-risk members leave. Your source actually showed charts where Xiang's membership growth flattened out, while payouts and sharing fees kept rising. It visually represented that challenge.
That's a critical sustainability problem they have to manage. How do you keep enough healthy people in the pool to balance the risk?
That's the million-dollar question for these platforms long-term.
And what about the platforms themselves? Are they actually making money? Your source suggested that with that fixed-rate management fee, they're probably losing money initially.
Very likely, yeah. They need huge upfront investment to build the tech, attract millions of users, and cover costs before the fee revenue really starts adding up.
So they're banking on reaching massive scale.
Absolutely. There's an inflection point where if they get big enough, the management fee revenue finally overtakes the operating costs. But getting there is the challenge.
Must be tough for new entrants then. People probably gravitate towards the biggest, most established platforms like Xiang and Shui.
Yeah, there's a network effect. More members means potentially lower, more stable costs, which attracts more members. Your source mentioned Ant Financial's own models showed this clear link between size and potential profitability. You need that rapid growth early on.
Creates a bit of a winner-take-most market, maybe.
Seems likely in this space, yes. Big barriers for smaller players.
Okay, stepping back one last time, thinking bigger picture. Your sources drew connections between this Chinese net mutual aid model and other insurance innovations happening elsewhere, right? Like Japan's proportional insurance or even things like health-linked insurance.
Yeah, policies where you get lower premiums for hitting step counts or other health goals. It points to this broader trend of insurance becoming more dynamic, more personalized, maybe more behavior-driven.
Like telematics and car insurance, too, where how you drive affects your premium.
Exactly. That's another great example. It feels like insurance is slowly evolving, moving beyond just being a payout mechanism after something bad happens.
Towards something that maybe tries to proactively encourage better behavior or healthy lifestyles or safer driving, maybe contributing more actively to a better society.
That seems to be the direction some innovations are pointing, yes. A shift towards prevention and positive incentives.
So wrapping this up, this whole wari-kan, hoken, or net mutual aid thing, especially as seen in China, it's a really fascinating glimpse into a different way of doing things. Tech-driven, community-focused, the scale is just incredible.
Absolutely. At its core, you've got shared risk, transparency powered by tech, and this really strong element of community involvement, even in deciding claims.
And it definitely leaves you wondering, doesn't it? Could this kind of model, or maybe different versions of it, catch on more widely in other countries? Especially thinking about those gaps in healthcare access or financial inclusion that exist everywhere.
That's the big question. What are the benefits, but also the challenges? When you transplant this into different cultures, different regulatory environments, the success in China shows the potential, but context is everything.
Yeah, it certainly gives you food for thought about how we manage risk, how financial services are changing.
Definitely. The way these models continue to evolve, it could really reshape how we think about financial security and supporting each other in the future.